Jim, always fantastic to have you back on ET Now. Thank you for joining us. Jim, I understand that currently you're not a rupee bear, but you are a rupee bull.
Well, that's right. Earlier in the year, we were very bearish about the rupee when it was trading at 54, 55, in fact, even higher than that in the 52, 53 range. But after it got to 60, I think really kind of into oversold territory, and where we are now, I think is grossly oversold. That's the way that markets operate, of course. It's the way that you expect things to happen. People panic, and the currencies in particular go to extreme levels. But I really don't think there's much downside left in the rupee, and I would be a buyer here. I'd like to be a buyer of a dollar-denominated Sensex index, but I still think that stocks have maybe held up a bit too much.
So, Jim, is it a short dollar, long rupee trade that you're advocating, or is it a purely long rupee right now?
Well, I think we're getting to the stage that should just purely be a long rupee trade. I think the dollar against a lot of other currencies is going to remain really pretty strong, but I do think the rupee has become oversold. And I think at this stage, India is probably gaining significant competitiveness in international markets. Obviously not a very export-orientated economy, but that will filter through. And of course, it will also deflect away imports, and that's going to start to have an impact on the current account position. I would think over the next 12 months, you'll see a radical improvement in the current account in India by this time next year.
Jim, would you buy rupee because you think rupee could give a strong and a sharp trading bounce, or you think structurally rupee has bottomed out and it is poised to now go higher?
Yeah, I think it's more structural. The rupee is now oversold. I think the Indian trade position, the competitiveness position has shifted dramatically. And we're now going to see, as I say, a combination of exports improving in terms of taking market share from other countries and imports falling purely because they've become so expensive to the domestic market. And remember, this is a domestic market that's also slowing down. So GDP is going to be much weaker than people were anticipating. And with that, I think the import demand will also be slowing. So fundamentally, I think the rupee is now an oversold currency and therefore a buy.
So what is your GDP target for the country for the fiscal close, Jim?
Well, we published a document in late February following a visit to India, which put real GDP growth in the range of 1 to 3% for this year. I think we're probably around about the 3% mark, given what's happened in the first few months of the fiscal year, for the full fiscal year. So that would be a very poor performance for India relative to where it's come from. But I think that's highly likely, and the result of that, there's going to be a lot of soul-searching in government circles as fiscal targets are missed, and in corporate circles as corporate earnings targets are missed.
Jim, downgrades have been kicking in thick and fast this morning. I mean, alas, a little too late, but they have been nonetheless. Do you think it's just a matter of time before India perhaps could be staring at a sovereign downgrade as well?
Well, the sovereign downgrade is overdue. I was appalled when Fitch Ratings confirmed the position of India a few months ago. I think that was a terrible mistake on their part. Real a misreading of what had been happening at the fiscal side. At least some ratings agencies have still got India in negative watch. And of course, I don't think that's a good thing for a country, but I think it's absolutely required to get this government to actually do something about the fiscal position and to do something about the policies that it's been following. Of course, it's a government that's probably only going to last for another 8 months or so. But the fact is that the fiscal policies have been the prime cause of the dilemma that India is in just now, and they have been the undermining feature of the rupee and of the economy for the last 5 years. So I'm just amazed that ratings agencies haven't done a sovereign downgrade already, and it's way overdue, and it's the kind of crisis measure, the crisis sign that it takes to get the Indian government to actually do something concrete on the fiscal side.
Jim, do you think fears of Fed tapering stroke tweaking are slightly overdone? The Fed minutes are due on Wednesday, followed by a Fed meeting in September. Do you think Fed will not do anything silly to disturb the apple cart?
Well, of course, they'll be frightened by what they see in markets already, and not just in emerging markets, which, of course, they don't really care about, as you can tell from the fact that they've pushed this quantitative easing for the last 5 years, knowing full well the people that would hurt most are the monetary authorities in emerging markets, and it's been a real battle, for example, for the Reserve Bank of India to stand out from, or to stand against the tide of money that the Federal Reserve and other major central banks have unleashed in the global economy. They're to blame for the carnage that we're seeing at the moment, the volatility that we're seeing at the moment. So they don't really care about what's happening in India. They do care about what's happening in the 10-year Treasury bond market, US. That sell-off there might be enough to make them think twice about making significant announcements on tapering, or actually to introduce tapering in the quantitative easing process. Personally, I think they should, and I think they should get out of that whole process as quickly as possible. But the fact is that where 10-year Treasury yields are at the moment, it's not going to be very much more on the 10-year Treasury before the US economy gets pushed back into recession.
Jim, are you certain, though, that tapering would start off come September? Because the market chatter this morning seems to be suggesting so.
Yeah, I'm not certain at all they'll begin the tapering process. You know, all we have to do is look at the experience of Japan. Of course, Mr. Bernanke has always criticised the Japanese for doing too little, too late. But the fact is that if you look at the whole experience of Japan over the last 10 years, it's had episodes of quantitative easing. Whenever it's tried to back away from them or exit from them, the economy has fallen apart. I think Mr. Bernanke is about to experience that in the United States as well, and that will then mean that he'll go back towards a policy of quantitative easing, because as we all know, he knows best, although thankfully he's only around for another 6 months as well.
Right, Jim, really appreciate your time and thank you for joining us.